Hello, folks. My name is Mark Iorio, and today we're going to talk about the impact that human capital has on business valuation. I'd like to thank CFO University and Steve Rosveld for hosting us today. There's a couple of notes in the chat that I'd like you to look at when you have a moment. If you're interested in talking to us further, you can please connect with us on LinkedIn. And I did put Al and my email in that chat as well. So if you have a chance to do that, Dave would prefer that you connect with him on LinkedIn. He's a busy man. He's an valuation expert. Dave is also the author of two books, both regarding the return on individuals, the new ROI. Dave is also the host of Behind the Numbers on RVN Television in Mount Laurel, New Jersey. And Dave is going to kick us off today with his description of the new ROI and what it means to business valuation. I will follow Dave and talk about how we connect the head with the heart and how we manifest that whole idea of employee engagement and how it becomes important for us as we begin to help increase the valuation of a business. Al Cini, our business partner, will talk about how to do it, how to actually motivate people to row in the same direction and get everyone actually rowing in the right direction in order for valuation to increase. So, Dave, let's kick it off with you. And again, thanks to CFO University and Steve for hosting us today.
Yeah, thanks again to Steve Roosevelt. Sorry he couldn't be with us. He's got some more important matters to attend to, unfortunately. Mark, Al, thanks so much for the kind introduction. And folks on the line here, thanks for tuning in. You're going to get some really good stuff here from Mark and Al. I'm your warm-up band for today. So I take that role very seriously, though. And I'm going to start off by mentioning that if you've ever listened to any kind of an earnings call or anything where a CEO is on television, chances are you've heard every CEO say that their people are their most valuable asset, right? We can't succeed without our people. But I'm going to ask you guys right out of the box here, if you can write in the chat room, where are people on a balance sheet? And Mark, I'm having a hard time seeing the chat box. So if you wouldn't mind telling me what you're seeing. Where are people on a balance sheet? Where do they show up on a financial statement? This most valuable asset.
Not there.
Yeah, whoever said not there, you're right. You're right. Your most valuable asset doesn't even appear on a financial statement. I'll explain why that is in just a minute here. But let me just give you a quick overview. Mark already gave you a highlight on my background, but I'm the managing partner of New ROI Advisors. As Mark said, I host a show called Behind the Numbers. It's also available as a podcast wherever you stream. I've got two professional credentials in business valuation. One is in the area of business valuation and one in the area of intangible asset valuation. So I'm a finance guy by trade, and you may be wondering, why is a finance guy here talking about human capital stuff? And the reason is because throughout my career, one of the intangible assets that I've valued is human capital. And I want to start off by explaining when it is we're brought in to value human capital. And I'll ask Mark again, if you could, or actually better yet, if you guys can just show me with a show of hands, how many people have ever been involved in what's called a purchase price allocation? If you know what that is, raise your hand. Mark, are you able to see that? For some reason, I'm only seeing panelists here. Oh, wait a minute. There it goes. Looks like Kurt's been involved in a purchase price allocation. Good. Kurt, I may pick on you for just a moment here in a bit. But purchase price allocation is an accounting exercise that's required to be done when a company buys another business. And the reason for that is those assets that are acquired are going to be stepped up to their fair value. So things like real estate, machinery, equipment, the hard assets, the tangible stuff, but also intangible. And most often we're involved in valuing things like technology assets. So think intellectual property, patents, trademarks, customer relationships, contracts. And then we also value the assembled workforce. But that doesn't actually appear on a financial statement, as we mentioned before. The assembled workforce gets subsumed into goodwill. And goodwill is the residual value after you've ascribed value to all those other tangible and intangible assets. So I'm going to ask Kurt very quickly here, since you've been through one of these exercises before. You've probably gone through it with a valuation specialist, and you know how much time was spent going through those other identifiable intangibles. How much time would you say, Kurt, was spent on the actual human capital piece, the assembled workforce? Mark, you able to see that?
I am not, Dave.
Okay. Well, I'll tell you the answer from the valuation lens perspective, and that is not very much. Um, our profession kind of gives it short shrift. And the reason is because, again, human capital doesn't appear on a financial statement. Human capital is considered a contributory asset, meaning it contributes to the value of the other assets. So, for instance, if we're valuing a customer relationship asset, the idea here is that you can't have a valuable customer relationship asset without the assembled workforce servicing those customers. So we'll value the assembled workforce and calculate essentially an economic rental charge to apply against the value of the customer relationship asset. And we value human capital in the form of the assembled workforce using something that's called a cost to replace method. And if anyone out there is familiar with the human resources attrition calculator, it looks very, very similar to that. The idea there is people are basically fungible. You're all the same, and any one of you can be replaced by somebody else if we pay them the exact same salary. That's the fundamental underpinnings. I'm not going to get too wonky about it. One more question for show of hands, and I promise I'm not going to bother you guys anymore. Anybody here ever been under a leader that uses what I would call management by spreadsheet? Somebody who only looks at the numbers, somebody who only looks at productivity statistics and doesn't give a rip about what the actual people are doing or thinking or feeling. I mean, usually I see a lot of hands going up. Maybe it's just me, or maybe you guys are just lucky and you haven't worked. Oh, there we go. Now I'm starting to see them. Okay. Yeah. Usually most people have had that experience where they work for somebody who only looks at the spreadsheet and really doesn't pay attention to what people are all about. And honestly, that was kind of the last straw for me, working for folks throughout my career who didn't really get it. I was a single dad for probably about a dozen years during my professional career. And I had the great pleasure of working for some folks who truly got it. They led with empathy, and they understood that I had, circumstance that I had to deal with. I also worked for some folks who didn't quite get it. And honestly, there'd be eye rolls if I had to leave at 3 o'clock, for instance, to go pick up a sick kid at school, saying things like, it must be nice to leave so early, never understanding or having an appreciation for what my evening was going to be like. And I will tell you, I learned firsthand about employee engagement during that time, because what I came to understand was, for those leaders that led with empathy, I would walk through fire for them. They got my best every day, and there wasn't a thing that I wouldn't do to demonstrate to them that their trust in me was worth it. And for the leaders that didn't lead with empathy, and maybe they didn't get quite so much. So I wrote an article about how my profession values human capital, and I kind of mentioned that it left a little bit to be desired. I've always believed that people are a company's most valuable asset. And in my profession, it doesn't usually land that way for a variety of reasons, mostly accounting purposes. Um, the article got some traction, and it led to a series, and then ultimately it became a book called The New ROI, Return on Individuals. And that book was my journey to prove that people really are a company's most valuable asset. I wound up collaborating with about 20 other thought leaders across North America and explored areas that, frankly, I don't get to see every day as a valuation professional. Second book was called The New ROI, Going Behind the Numbers, which is a compendium of the conversations that I've had on my show, Behind the Numbers, where I've had business leaders coming on to talk about their experience in basically driving business value from the lens of what they've done around their human capital. So the key takeaway from the second book, and as well as the first book, is that leaders that are intentional about doing the right thing around people really have reaped the benefits from those investments. And I emphasize investments because I firmly believe that people are assets and not expenses. So here's a couple of fun things that I learned in my journey to explore and prove out that people really are a company's most valuable asset. Having been in the M&A world for a chunk of my career, I was very surprised to learn that depending on where you get your statistics, anywhere between 75 and 90% of mergers and acquisitions fail to deliver their prescribed synergies. So when a company buys another business, the math is supposed to work like this: one plus one equals three, right? The sum of the parts has to exceed the individual components. But surprised to learn that most of them fail. And the number one reason for failure to integrate the human capital correctly. Another thing I learned, which I never spent a whole lot of time thinking about before, was that roughly two-thirds of the workforce in the US and generally worldwide as well are disengaged. They're checked out and they're doing the bare minimum. I think a new term of art might be quiet quitting. You should probably have seen that a lot in the news recently. What came to learn, as I mentioned earlier, was that in my own personal experience, when I was engaged, when I felt bought in, when I was doing something to demonstrate to my leaders who cared about me, who showed appreciation, they would get the discretionary effort, that going above and beyond. And that's what drives innovation. That's what drives morale. And ultimately, it's going to drive business value. The other thing I've learned along the way was you probably have seen statistics around things like best places to work, great places to work, things along those lines. The companies that are given those titles have to go through a rigorous screening process. And a lot of times, part of what they're doing to demonstrate that they are great places to work involves employee sentiment. So the employees are actually confirming that the company is great from a number of standpoints, including the investment that they make in their people and the culture and the morale that's built intentionally around that. And interestingly enough, those best companies outperform their peers on pretty much every financial metric. So they usually outperform in sales and profitability, lower turnover. They also outperform in terms of stock price. So one more thing I'm going to mention on that I learned was that these companies that are the best ones, they also enjoy something that's called a lower cost of capital. And I think everybody on the program here today is in the finance profession. So I'm not going to waste your time in going too deep into explaining what that means. But for those who might not be involved in finance day to day, cost of capital essentially is, as it says, the cost of both debt and equity borrowing. And you can think about it this way: as a borrower of any kind, if you're a risky borrower, you pay more for money. If you're a less risky borrower, you pay less for money. That's in terms of your interest rate, or actually the expected rate of return that an investor might have. All of these best companies enjoy a lower cost of capital. Why does that matter? So a quick valuation primer. Many of you probably have heard and thought of valuation as basically an exercise in applying multiples to EBITDA or revenue, for instance. But it's more than that. And the ones who've been through the exercise know what I'm talking about. Valuation is a forward-looking exercise. And the value of a business is the present value of its future benefits, the expected cash flows into the future. And you bring those cash flows back to today's dollars at a cost of capital. And the way the math works is the lower the cost of capital, the greater the business value. So can you see how it's all connected? The connection between human capital and the idea of a business valuation are just inextricably linked in my mind. And being someone who values human capital day to day, I never thought and certainly have never seen a situation where folks are really all excited about how you properly value the workforce, because it doesn't really matter in review. Not being on a balance sheet, who really cares? But when you start to talk about the impact that people have on the value of the enterprise, now you get people to start to lean in. So what if you could actually dial up employee engagement and increase it from the current low numbers that it's been hovering at for probably the last 2 decades? What impact would that have on business valuation? Well, the good news is Mark and Al are here to tell you exactly that. So guys, I'm going to hand you the baton here.
Great. Thanks, Dave. That's great stuff. This is hard work. I mean, this is not easy for organizations to accomplish. And a lot of it has to do with really training your brain and orienting your brain around these three questions that Al and I talk about a lot, which is, who am I, right? Who am I first? When you're working in a team environment or working for an organization, oftentimes you'll see assessments come out, the Hogan assessment, or a Myers-Briggs assessment, or a DISC assessment. So you understand who you are as a person. Who are you? I get to understand that through those same valuations, those same assessments. The problem is that we really don't know who we are as an organization. And, oftentimes, as Dave said, and we all have been around this, most organizations say the same thing, and it comes from leadership. And we're going to call leadership out on this because a lot of leaders say that employees are their greatest asset. Yet, what they don't do is they don't change the atmosphere and the culture inside the organization in order to effectuate that change within the culture of the organization. They can't do it. They don't know how to do it. And unfortunately, what they end up doing, and this is fine, this works for a lot of organizations, they offer things like perks. Perks are not purpose. Perks are things like Taco Tuesdays, or Pizza Fridays, or having paintball outings, or bowling outings of sorts. But in fact, what has to happen each and every day is that people have to change the way they behave. And in order to do that, you have to have an understanding of what your overall mission is in the organization and your role target is for the organization. Now, we start every process by imagining, imagine your entire organization as though it were a single person doing its best work on its best day to deliver all of its promises and achieve all of its goals. What does that look like? What does that role model look like? Think about the role models in our lives. And I'm just going to share one screen with you today, and it's this one. This screen here will show you what happens when you start to think about who we are as an organization. These triggers occur in your head, in your frontal cortex. When you start to imagine your team as though it were a goal-focused, candid, confident, direct team, this part of your frontal cortex actually lights up. Now, this whole process is really connecting the head, intellect, with the heart, the emotion of the organization. And in order for you to do that, you've got to think about what it is that this person is when you're describing it as a person. If you're more innovative, a more innovative team, and more expressive and transformative and inspirational, this part of your frontal cortex lights up. If you're more of a caretaker team, and things are more harmonious and methodical and following the guidelines, following rules, and being compliant and predictable, that part lights up. And lastly, if you're more empirical, scientific, and want to be an expert in your field of practice, this is what happens. So you're connecting the head with the emotion of what you're thinking about when it comes to that specific team. Now, so in order for this to all work, in order for things to happen, you have to then gather all those thoughts and information and get everyone into a room so that you can have a consensus of what that team looks like. Who are we when we're doing our best work on our best day? What are our behaviors? How are the little things that we do each and every day that are observable behavioral changes that we can make on a daily basis? How does that impact the culture inside my organization in order to get closer to that North Star, in order to get closer to that role target, so that we can work together in a much more collaborative way, understanding one another, and not really worrying as much about our individual characteristics as much as what we do when we're together, working together on a mission. So that's the whole idea behind the gathering of information and data to connect the head with the heart so that we can help migrate that culture together collectively. Metaphorically, we like to say, if you're all in the same boat, rowing in the same direction, that's wonderful. But it's not until you're rowing in the right direction that it really matters. So that's the process that we'd like to see you go through. And a lot of folks really have a difficult time saying that they're going to put something into practice. If your employees are your greatest asset, then try these exercises. Do something like that where you're asking people to describe those characteristics, those traits in a person, so that you begin to connect the intellect with the emotion. The last part of that is now implementation. What's that look like? So let's just say, for example, as you build up those 5 or 6 or 7 ideals, the manifesto of ideals, or we call them aligned inspirations or commandments, what are the 2 or 3 things that you believe you can do each day to help migrate that culture toward that North Star, toward that role target? Holding each other accountable for those actions, those commitments, is really what helps migrate that culture toward that target that you're looking for. Now, when Dave was talking about the change in that culture, a change in engagement, so that you can impact the value of an organization, this is actually how we do it. And all of you have been on teams, right? So in order for things to work together in a more collaborative way, you have to be looking collectively at that target, that stake in the ground that you all aspire to be as a group. So think about it as, why are we here? Who are we when we're doing our best work on our best day? And what does that look like? And that will help you to begin developing the process of connecting the head with the heart inside your organization. And, using those perks that I talked about earlier as a nice to have, but culturally, in order for things to work, in order for you to have an impact on the valuation of your business, the culture has to move toward that North Star. Thanks, folks. I'm going to turn it over to Al now, and he will kind of show you how to do it.
Mark, thanks a lot. And Dave, thank you for setting this whole thing up. And Steve Roosevelt, unable to join us today. He's dealing with some family issues, and we wish him the best. And he did say that his brother might be joining us, Todd Roosevelt. So Todd, raise your hand, and it's I see you there in the attendees list. It's good to have you here. There he is. Let me see if I can't pick this up on a couple of themes that really important messages that we got from both Dave and from Mark. The first, I think, is, you'll remember, a major thrust of Dave's conversation is that we generally track people inside of our organizations as though they're objects that you can assign numbers to. And he referred to it as managing an organization by spreadsheet, which is basically going down the list of people who work here and trying to figure out how much they're worth by assigning some kind of a number to them. And Mark mentioned that there's something a little bit beyond that, a little further past that, where how we feel about our work is just as important as what we know about our work. How we feel about each other is even more important than what we know about each other. That whole idea that the point that Dave makes in the books he's written, that people who really care about the work they do and people for whom the work really matters will do a better job and will get more done for you, has been borne out over and over and over again. But traditional management techniques focus more on deconstructing human beings and making objects out of them, because we believe that when you make intangible things tangible that way, they become more predictable and they become more manageable. But you subtract something from the equation when you do that, when you look at it that way. And so in explaining how at your very next meeting, when you get everybody together, and whether it's a Zoom meeting or an in-person meeting, these are practical steps you can take to try to change the equation so that you look at people more as the individuals that they represent, that their individual contributions and their collective capabilities, and just as assets and liabilities. Okay, we start pretty much where Mark said you start. And my background, I should probably explain, is project management. The typical approach to project management, by the way, is with a tool, let's say like Microsoft Project, where people resources, which is pretty much the same as rows on spreadsheets. And, that process is primarily about assigning a deadline and then blaming people on a regular basis for not getting it, not reaching that deadline, shaming them for maybe falling down on the job. I mean, that's for a lot of people, that's project management, but there's a level of project engagement that transcends that. And what I'm going to be doing is giving you some practical approaches to managing a project, actually leading a project, because there is a difference between managing people and leading people. Things that you could do at your next meeting that actually engage them more fully in the work they do. And we've seen this over and over again. And as I go through it, I'll explain to you the measurable aspects, the quantifiable elements behind it all. Even though your people never see it and don't care about it, what your people care about is the work that they do and the contribution they feel they make to that. So if you remember, Mark mentioned the 3 answers that we need to have before we can be full participants on any team. I need to know who I am. I need to know who you are and whether we can trust each other and build a sense of trust among us. And we also need collectively to know who we are. Who are we when we're doing our best work on our best day? Mark mentioned we have a standard process that we follow in every one of the workshops we conduct. It starts with exactly that question. So follow along with me here. At your next staff meeting, and you don't have to be the leader. You could be somebody who just says, let me try this on behalf of our team next time. Get everybody to think for a few minutes about who they are collectively. Who is this team? Who are we when we're doing our best work on our best day to keep all our promises and achieve all our goals? And we've spent a lot of time formulating that. I'll repeat the question because the language in that question is important. That gets the process of lighting people's brains up started. So who are we? Collectively, who are we? What would we be like? Let's visualize ourselves collectively as though we were a single person doing our best work on our best day to keep all our promises and achieve all our goals. Wrap your brain around that for maybe 10 seconds. We want to allow generally the people in your meeting to take maybe 5 or 10 minutes to really think that through. And what we're really doing here is beginning that process of understanding the answer to the question, who are we? By creating the role model that we've learned in our research represents the core of any really effective team. What we've learned in the work we've done over the years we've been doing it. We've been doing this now, Mark and I, for 11 years, 12 years. What we've learned is that at the heart of every really effective team, there's a role model, an actual visualizable person who represents that team when it's doing its best work on its best day. And it can be discovered by everybody working together collectively on answering that question. So ask that question, give people a few minutes to answer it, and then start collecting data from them. Ask them, if we were a single person doing our best work on our best day, what words describe our behavior? And as Mark pointed out in the slide that he showed, we've found in our research that the answers you'll get fall into 4 categories of synonyms. Some people will describe somebody who's goal-focused, oriented on a result, deadline-oriented, and always driving. We call this person the driver. And that'll be the person that'll be the person they see when they're answering that question. Other people might see somebody who cares about people, empathizes with them, is very patient, works very methodically and carefully to make sure that one foot is always in front of the other and all the proper steps are followed. And we call that person a caretaker. Third answer you'll get back is the expert answer. We are collectively the best in our field. We know more about our subject matter than anybody. And you'll get those words back. Very smart, very intelligent, very practiced, very competent. You'll get those back. And the fourth kind of answer you'll get back is the entertaining answer. We are creative. We change the subject. We move from one subject to another subject with great agility. What we've learned is that different organizations will give you different profiles back. And what you want to do is write down every answer you get from everybody. Write down all the words and then start comparing the words with each other. What we've learned is that the more different answers you get back from that question, the less clear in people's heads what's expected of them and what it is they're supposed to do, and the less engaged in their work they are. So step 1 is a current state. Who are we when we're doing our best work on our best day? Give everybody an opportunity to answer that question with words that they believe describe the person they visualize when they're answering that question. Write down those words and then start talking with everybody about the differences among the answers. And that takes you, that's step one. That takes you to step two. The step two process is, okay, now that we've all listened to each other's individual answers, who we all individually think we are when we're doing our best work on our best day. And now that we've written it all down on the board here, you can use a whiteboard, and if it's a Zoom meeting, or an actual whiteboard if you're present in a room together. Now that we've looked at all that, who are we actually? Which parts, which elements of all that actually represent who we are when we're doing our best work on our best day? And what you'll find there is that in that second step, everybody on the team will begin to work together to formulate the one picture of the one role model that represents all of them. And it's important to remember, every team uses combinations of all four of the elements that I just described, but they use them in different amounts. So an accounting firm will typically use a lot of expert, which is not surprising. An advertising agency, especially a creative agency, will typically use a lot of creator, which is not surprising. A law enforcement organization will use a lot of driver, and a school will use a lot of caretaker. That's normal. What you'll also find, though, is that every organization is going to use elements, a lot of one element and a little bit of another element, to put together the package they believe they need to put together to deliver the goods for the people that they represent. Now, the very important part of this is we never talk about the work. We don't particularly care about what it is you do for a living. We don't want to focus on just the people who run this team. We never want to focus on just the people who've been on this team for 25 years. We want every voice equally reflected in all the answers we get. So from our point of view, whether you own the company or answer the phones and mop the floors, whether you started yesterday or you started 35 years ago and you've been here your whole life, your answers are all equally important, and they all equally contribute to this role model we're trying to bring to life. And when we're finished then with step two, we have an articulated picture, an answer to the question, who are we, that represents everybody on the team and their individual points of view on that subject. And everybody owns that result. Everybody feels as though they've participated in this process, and they've all done so equally. And that, for us anyway, is the essence of diversity, equity, and inclusiveness. We want to make sure nobody ever feels left out. And that means we have to respect every answer we get. And in fact, we do. So now what we have at the end of step two, remember, step one was about getting everybody's individual descriptions of who we are when we're doing our best work on our best day, who this person is, this virtual person, this role model. Mark referred to it as a role target. This role target who represents the best of us when we're doing our best work on our best day. That's step one. Step two is now we've spent maybe a half an hour, 45 minutes, working collectively, building the collaborative answer to the question, who are we, by pulling from the words we gave individually and selecting the ones we believe actually describe it. And in our experience, and we've done hundreds of these, that conversation moves along very quickly because nobody can lose. Everybody can only win. I mean, the end result of that is never contentious, it's never argumentative, it's never difficult. It's an easy conversation to have because when everybody really seriously thinks about it, everybody comes up with the same answer. This is just the first time they've ever been asked this question. So it's a little uncomfortable in the beginning. And Mark mentioned it's hard work. It's definitely not the kind of thing that rolls right out of your head, but it can be prompted. And ordinary people can answer these questions brilliantly. We've worked with truck drivers, and we've worked with mechanics, and we've worked with police officers. And it doesn't matter how much school you've had or what your IQ is. Everybody wants to be a better version of themselves. We're giving them some kind of a framework here where they can explain what they believe that better version is. That's what comes out of step two. This better version of myself, when I'm wearing the hat of my team, not better version of myself collectively, but when I'm a member of this team, when I'm a part of this company, this is who I am. This is who I feel I want to become. That's step two. And when you get to step two, you can move very quickly then to step three. Now that we know who we are when we're doing our best work on our best day, what are our 6 or 7 or 10 commandments? What are the things we do every day? Answer the phone before it rings 3 times. It could be something simple like that, or it could be something bigger, like make sure that I always reply to a client complaint that was submitted by email with a personal phone call rather than a reply email. Those kinds of promises that we're willing to make, those commitments that we're willing to make, that we believe our role model would do. These are the things we believe our role model would do. Become the framework for step 4. So step 1 is, who are we when we're doing our best work on our best day individually? Step 2 is we work collaboratively to shape that, really get to know that person. Step 3 is we bring that person to life by describing what it is they do, how they handle problems, how they deal with issues, how they relate to each other, how they relate to clients. That's step 3. And Mark mentioned step 4. Step 4 is the money shot. Step 4 is, now that I know who our role model is, and this is the part I think Mark and I enjoy the most, what 1 or 2 or 3 things about me am I learning to change and improve from my role model, who represents the best of us, that I can put to work beginning tomorrow morning, that will make me proud. Therefore, I'm willing to share it with everybody else on my team and tell them what I'm going to do beginning tomorrow morning. And I'm giving everybody on my team permission to congratulate me when I do it, celebrate me when I do it. We end up with an inventory of individual, what we call alignment plans, actual specific deliverable behaviors that I intend to engage in to align myself with the role model that represents the best of our team. This, to us, is SMART goals, SMART goals, and Mark maybe can mention a thing or two about that, brought to life. But I'm doing it not just because I cognitively know that I need to do these things, but because I feel that the doing of them will make me proud. And that pride is what drives the motivation that makes it possible for me. I can tell you, I've done this as a project manager. I've used this exercise over and over again. This exercise is the difference between getting 80% of the work done by 5% of the people and 50% of the work done by 60% of the people. You get much more participation from people who believe they're being heard, from people who believe they've contributed to this role model, from people who believe they brought their team to life in a relatable form. You get a much higher level of participation out of them. And that directly drives what Dave Bookbinder referred to, which is, how much is my business worth? If 80% of my people are fully engaged in my business is worth more to a buyer than if only 30% of my people are engaged. And Dave pointed out the statistics are, if you get 30% engagement in your company, you're lucky. Generally, 60 or 70% of people are actively disengaged in the work they do, and that's been measured over and over again. So I hope those steps made sense. You have our email addresses. If you'd like me to send you an outline of those steps, I'd be happy to do that. Our commercial offer, and Mark, you could talk a little bit about this. Our commercial offer is about structuring that meeting and conducting it for you so that we can help you through those steps and help your team members through those steps. And we have a methodology we've developed over the last couple of years that actually move you along on that line. So try this. I'm telling you, it works. It's miraculous. And it makes the difference between doing things, which most companies focus on, and actually getting things done. And that's ultimately the shift you're looking for, shifting people from merely doing things, being busy, to actually accomplishing measurable, manageable results. And this, for us, has always been the way forward. So, Mark, back to you.
Yeah, Al, it's interesting that you talked about the index of the 3 indices that we have in the process. And when you get everyone together and you're asking them individually what they thinking about their organization or their team as though it were a single person doing its best work on its best day, oftentimes you'll get a very scattered approach of where everyone is, which means that we're not rowing in the same direction. We're not singing from the same sheet of music. And it's an interesting corollary between you've all heard of Gallup, right? The Gallup Q12 study, which is a study that comes out often. And there's 12 questions about engagement, really. And our process correlates to that Q12 study. What they say is that as that index goes up, as that Q12 goes up, and as our index of alignment goes up, and we can show you that in a workshop that we would conduct for you, as it goes from one side to the other, the value of your business starts to rise. And why does that happen? It happens because there's a correlation between collaboration and compatibility and working together and productivity and profitability, which increases the value of the business. So we've done so many of these over the years that it's a remarkable process. Catherine said she cannot see our contact information in the chat. So Catherine, I'm gonna put that back in there in a second here, because I think, thanks for saying that. Al, you did a fantastic job. Dave, you did a wonderful job with that.
I'll just add one more thing, because Dave knows it and Mark knows it and I know it. If you can't measure it, you can't manage it. We absolutely all agree. And everything about what we do and everything about you following the steps we've given you are about transcending the woo-woo part of this and actually making something measurable and manageable about engagement. It's not just good enough to give you a needle to read that tells you how engaged your people are, if we're not also giving you a dial you can turn to change it. And that dial, I think, is where, when Mark mentioned index of alignment, how aligned are we with this role model that represents, and how aligned is that role model with our mission? Because those three alignments add up to getting the work done that needs to be done. It's higher profit, lower costs, all those things Mark mentioned.
Al and Dave, Deepak is asking, measuring part is so difficult. How do we do that?
Well, we have, I can tell you how we do it. And the Q12, by the way, the measuring engagement is handled nicely by Gallup and their Q12 instrument. You could Google that. You'll learn all 12 questions from that. You can create your own survey and you could follow that to get a sense of how aligned, well, you can get a sense of how engaged your people are from that. And in fact, that's a common measurement that most organizations use to report employee engagement. It's been around for a long time, got a lot of history. Recommend you take a look at that. And now, whether or not your people are aligned with each other is something that we call index of alignment. And that is a function of that description that I give you, a direct function of the description I give you when I'm answering the question, who are we when we're doing our best work on our best day? If my answer is radically different from yours, and yours is radically different from hers or his, the net result of all those differences is that we don't really understand each other and we don't understand ourselves as it relates to supporting this team. And the knob you turn is that conversation where we work together to describe that person, who we are when we're doing our best work on our best day. And when you drive that up, Q12 results go up. We found that over and over again. That's what Mark's referring to. You increase the answer, the alignment of the answer to the question, who are we? When you increase the alignment to that, you also increase as an effect, and we've measured it at like 0.86 in terms of correlation. You improve the Q12 results that you get, the engagement numbers that you get.
Al, Frank is asking, how does this process of alignment correlate to the idea of the value of the assembled asset when valuing a business? Dave, you want to take a crack at that?
Yeah, repeat the question again, Mark.
How does this process of alignment correlate to the idea of the value of the assembled asset when valuing a business?
Yeah, so I'll answer it in a couple of different ways. Number one, when we're valuing the assembled workforce, like I said, we're valuing it in the context of an acquisition. So we're valuing the acquired workforce. Intangible value is only recognized when it's acquired. So just by analogy, think about Kellogg's. They've got the great Tony the Tiger trademark, but it was developed internally. So you won't find that trademark on their balance sheet. But when they bought Keebler, you'll find Keebler trade name, for example, does appear. So we're only valuing the acquired workforce. It doesn't represent the entirety of the workforce. And again, the methodology that we're using gives it short shrift. So the correlation between the workforce and the business value, in my lens, is through the discount rate, as I alluded to before, that lower cost of capital. And even without a valuation, as Al just described here, if you can turn the knob to the right and increase the engagement, drive the discretionary effort, you'll start to see increases in sales and profits. And by inference, all of the things equal, your valuation will increase. And the last thing I'll just add to that is that this isn't just me just saying these things from a valuation lens. There are exchange traded funds that will actually have, as boy, my camera just blitzed out here. There are exchange traded funds that have as their investment strategy a focus on buying companies that are doing the right things around their employees, making investments in their people, because they've documented and demonstrated that those companies will in fact outperform. So it is all connected. The good news is people are really starting to pay attention to it.
Deepak and Frank, I hope we answered those questions correctly. Catherine, we must be having problems with the chat because not everyone is able to see the chat, and I'm only able to share it with the host and the panelists. Catherine got the information, and Deepak said thank you.
Right.
So folks, I don't know how to get this to everyone because I can't share the information. I guess what I can do here. How about this? Can you see this? Is that visible to everyone?
You know what, Mark? Steve can also beam out whatever it is that you're trying to share to the email addresses of the attendees afterwards as well.
Yeah, that's fine. We can do that. But let me see if we have more questions here. I think we may.
Right.
Chat is disabled, Kurt said, and Todd said yes. Can I make it bigger? Hold on, Kurt, just a sec here. I will do that. A little better. Dave, Al, can you see that?
I can see that. It could be a little bigger.
Yeah, for sure.
You could zoom in a little bit more. That's good.
Better? Is that better?
Yeah, that's great.
All right, I'll leave that up there for a second. And if you want to copy that, connect with us on LinkedIn. That's Al's email, al.cini@getbcat.com. I'm below that, mark.iorio@getbcat.com. Please connect with us on LinkedIn. And Dave is below that. That's his LinkedIn. There's a number of Dave Bookbinders, I think, out there, but not too many.
There's only one.
There is only one. And you want to get his books, by the way, because I think both those books are groundbreaking books on the whole subject of how people actually drive value and not just drag it down. I think that's such a big deal. And so we're all grateful to you, Dave, for shining a light on this.
It's my pleasure. Thank you. And thanks to you folks who are watching here today and already reached out to me on LinkedIn. I have received your messages. Thank you.
Dave, Frank says Dave is a pioneer in the realm of the new ROI. He can point to one of my, can he point to one known business where this can easily be shown on my, to my MBA students? Can he point to one known business where you can easily, this can easily be shown to Frank's MBA students?
Yeah, I would say that the easiest way to do it is those ETFs that I alluded to, Mark. There's a whole portfolio of companies that outperform. So Frank, if you'd be kind enough to message me through LinkedIn, I'll connect with you offline here and help you any way I can.
Dave, Deepak's asking what the difference is between the two books.
Yeah, so the first one was my journey to actually explore my belief that people are a company's most valuable asset. I actually never intended to write a book. It all started with that one article, and people told me just keep going, and ultimately it had to become a book. The second book is a compendium of conversations that kind of put the exclamation mark on what I learned in book one. These are guests who were on my show Behind the Numbers, and they were CEOs, CFOs, consultants, other thought leaders and speakers who are doing work in either the human capital space or running companies, advising companies, and they've done something intentionally with the company that they're working with or working for to change the corporate culture and what's happened as a result of that. So that's the difference between the two. First book is the white cover. The second book is the black cover.
Todd's saying much of what you discussed today comes down to the culture of an individual business. Have you seen common specific aspects of culture successful companies share? Al?
Yeah, what we found, and we've done a lot of research on this, is a higher index of alignment in successful company cultures. That's when you ask people that question, and we've seen it over and over again, Todd. When you ask people that question, who are we when we're doing our best work on our best day? in companies that are doing well, where people really feel strongly that they're a part of something and that they belong to something, they answer the questions in very similar ways. They see the same role model. And in organizations that are transactional, that are maybe shooting for competence, but nothing higher, nothing beyond that, not saying bad things about them, just saying that there is another level they could reach if they just went a little further, that we tend to get a lot of different answers back from those people. And those different answers lead to occult conflicts between people and arguments over things that don't matter, and a lot of passive aggressive behavior that keeps things from happening. And so there's a whole new world out there for companies that just make that leap from mere competence, working to do the work, to actually achieving things. And the key there is engagement, and we start with this index of alignment. Thank you, Todd.
Yeah. The other thing I would just add to from the research that I've been doing recently, empathy seems to be a pretty key characteristic. It dovetails neatly with the index of alignment, but leaders that lead with empathy make a big difference in organizations.
You know, a lot of times CFOs get a bad rap for not being empathetic, and that's why we're doing this today, because what we found over the years, and Al was kind enough to say that we've done hundreds. Actually, we've done thousands of these programs over for individuals and teams over the years. But one of the things that really does occur to us is that it doesn't matter what position folks take. And Dave is right. It may sound a little corny, but they're heart-centered leaders. They're people that are empathetic toward others. And as that starts to grow and manifest, that's really the key to this whole thing. I mean, it's a wonderful thing to watch. And Al said it a few times, you become a better version of yourself, and the team becomes a better version of itself. Al, there's a follow-up question. How do the best companies get their key stakeholders in alignment to create a great culture?
Well, and that, if, at the risk of being a little repetitive, I know what we typically believe is that if we write a mission statement and get everybody to memorize it, that does it. But what we've learned is that mission statements end up hanging inside of frames, gathering dust on walls of conference rooms, and hardly ever really speak to the heart of the people that do the work inside the company. And that is the major challenge, is to think past the executive suite. It's certainly important that all the leaders of a company are on the same page with each other. But as you're answering that question, you've got to be thinking ahead to all the people, all the way down to the people that mop the floors and answer the phones. If they're not all included, then why even bother to start? Because that ultimately is where you need to land. So any program that you begin has to be designed so that it moves eventually out of the executive suite and into and among the rank and file, because they're the ones that are really looking for you. I mean, they know you're meeting behind closed doors, working on these things all the time. They know that. They're always waiting for you to tell them what you've discovered doing that and how they can become involved in what it is you put together. And you really need to be thinking about that, because that's where the love is, and that's what we're looking to tap into.
And the other thing too is that when you're in these workshops and the leadership are in the workshops, they're being held to the same level of account that everyone else is being held to. So when Al says that no matter if you're the leader, the founder, the CEO, or the person that mops the floors and answers the phones, you're answering these questions the same exact way that everyone else is. So that's important, and everyone sees that. Al, Frank has a comment here for you and Dave. There's a lot of validity to the statement that often the customer comes second.
I kind of like this subject because, and this is a conversation we've had, Mark, a couple of times, and we've never shared this with Dave, but often people will say things like, well, shouldn't we include the customer in this process? And in fact, you can. And we've worked with clients who have included not every customer, but select customers in that process of finding out who we are. There is, from our point of view, no difference in the mission of a company between serving the employee and serving the customer. You're serving both in the same, you may be doing different things for those two different audiences, but it's the same role model, whether you're inside the company or outside the company. That role model is who you are. And it should be reflected even beyond the behavior of the people in the company. One of the reasons why we call our approach the Brand and Culture Alignment Toolkit is because your brand is how you're perceived by your customers. And that is the living, breathing, walking, jumping, leaping, dancing version of your role model, whatever that is. And everybody needs to be representing that. And when they do that, you've brought the customers into the equation in a healthy and sustainable way.
Yeah, and I'll just add, I think what Frank may also be alluding to is a quote that's often attributed to Richard Branson about you take care of your employees, they'll take care of your customers. And recent dining experiences at certain restaurants certainly point that out, and I would certainly agree with it. If you have a good aligned employee workforce, the culture is solid, and people feel valued, they'll go out and provide great customer service. If you've got people that don't respect leadership, feel disconnected, they're not going to treat your customers well.
We are at the top of the hour, and we cannot thank you enough for joining us today and participating as richly as you have. We really appreciate the time, and it's been a great session. Deepak, thank you for saying that. Deepak said it's a great session. Thanks for the knowledge sharing. Thanks to everyone. We appreciate that. We appreciate CFO University. We appreciate Steve and him allowing us this forum today. And folks, if you really want to get in touch with us, please connect with us on LinkedIn. Todd, thank you for saying that. And if you need us on LinkedIn or connecting us with us via email, please do so. So thank you all very, very much. Al, Dave, great job.
Thanks, everyone.
Thanks, Mark.